place and experience. Indulge your senses with immersive game titles. Boost the excitement with our engaging promotional tools and generous network promotions. Be in control with XI Viewport Management Tool and experience seamless gameplay powered by X Platform. Enjoy place and experience as our partners do in over 20 regulated markets. And get ready to go big. Big play is on. Playson.
Well, there you go. Hello, and welcome to another edition of whatever this is. It's weekly news by Next.io. I'm Connor, the main one, but I'm joined today by my very trusty sidekick, senior reporter at Next.io, the one and only Mr. Zach Thomas-Aku. Zach, thank you for joining me. How's things?
Yeah, things are going very well, Connor. It's a lovely sunny day in London today, so I can't complain at all.
That's right. Shall we go and find a beer garden after this? See if we can relax into springtime a little bit. Because you're right, it's absolutely delightful out there. In fact, shall we just wrap it up now and go?
Well, wouldn't that be nice?
It would be nice. But first, actually, we've got some pretty big topics to discuss, your biggest stories of this week. And we're going to have a bit of a fun one today, Zach, because we've got two kind of opposite stories in some sense. We've got Games Global filing for a $100 million IPO to go live on the New York Stock Exchange. And on the other hand, we've got Endeavor, which is going private from the stock exchange. It's currently in the process of taking itself off the stock exchange, and one of its investors has started to kick up a stink about all that this week. But we're going to start with Games Global, which was made a pretty big splash yesterday, I think. So just for anybody who's not aware, Games Global, because it is a pretty new company in the sector, it was incorporated in 2021. It's headquartered on the Isle of Man, led by Walter Bugno. I hope I'm pronouncing that correctly, who used to work for IGT and Lottomatica. So big kind of a lottery casino type guy. Anyway, Games Global has a portfolio of online slots and that kind of thing. I think they've got about 1,300 slots, something like that, because they bought Microgaming's distribution business and online game portfolio in 2022. Then they acquired Digital Gaming Corporation's B2B assets from Supergroup this year. So they've been kind of buying things up. They've been just doing that whole online casino supplier thing. And anyway, they are run by Walter Bugno, as I said, and they are owned or majority owned by an investment management company called Zinnia Group, which is a catchy name, isn't it, Zach? Anyway, that's a little bit of background. But Zach, you reported on this filing for an IPO yesterday. Do you want to give us the headlines from this story?
Yeah, absolutely, Connor. So yeah, before I start, we're covering an IPO and a take private deal, which I think shows, sort of the swings and roundabouts of, of the finance world. You want to do an IPO to raise a bunch of money, and then you get a little bit frustrated with the compliance requirements and having a duty to the share price, and so you want to take private. But yeah, this time first we're talking about the IPO, Games Global, who in an SEC filing announced its plans to list on the New York Stock Exchange. So the offering is expected to raise about $100 million, which is likely to be the largest IPO of the year. So funnily enough, mentioning Walter Bugno, last year's title holder was Lottomatica, which had an IPO about $600 million, if I remember rightly. So Zinnia wants the money, but it doesn't want to relinquish control just yet, because it is going to retain over 50% of the business shares following completion of the listing. But it's not going to use it for the coffee table to redo the office or anything like that. The money's going straight back into the business. So the funds are going to be directed towards corporate purposes, and like they mentioned a bunch of stuff like improving technical infrastructure, research and development efforts, sales and marketing operations, and entering new markets. So the idea is it's gonna help boost the business in future. And I think especially towards the US, because this is really what it's trying to do, is it's trying to put one leg into the US, which actually isn't a huge, it's not really where it gets all its revenue from at the moment. It's quite big in Ontario, but the US is a minority of its revenue. It also, the Games Global in the IPO file, in the SEC filing, also said it could use some of the money raised for M&A, but it hasn't yet committed to a deal. So the digital gaming corporation's B2B assets that it bought of Supergroup, which you mentioned, that was just the latest in like 4 or 5 deals over the past few years. So it's really been doing a bit of a M&A spree, bit of a buying frenzy. And I think just before I hand you back the microphone, this one other interesting thing of this is it's going through an IPO. I think anyone who's covered gambling companies over the last few years will see a lot of the time, if you want to list, you went through a special purpose acquisition company, the famous SPAC. Now, there were a bunch of those, and most of them failed quite badly, valuations way below their peaks, with the big exception of DraftKings, which I think we'll all agree is doing pretty well. But yeah, as part of the listing, it's disclosed a bunch of previously unseen details about its financial statements, which I'm sure you're going to tell us all about, Connor.
Yeah, absolutely. Cheers, Zach. So I think the idea is obviously, having only been incorporated a few years ago, 2021, Games Global has sort of actually been generating some pretty compelling financial results and some pretty big revenue figures. So obviously they want to kind of raise this big chunk of cash, 100 million, so that they can, I suppose, kind of supercharge that growth and really take it to the next level. Big risk, I guess, but you know, you don't get anywhere without a bit of confidence. So there you go. But let's have a look at what they've already been doing this year. So usually as a private company, they wouldn't make this information public, but in line with SEC requirements for filing the IPO, they have revealed that they generated 273 million euros in revenue in the 9-month period ending at the end of last year. So in 3 quarters of a year, they've made 273 million euros in revenue. So annualized, I guess that makes about 360, if my maths are right. So pretty big company, actually. EBITDA was 121 million euros, net profit of 79 million euros, which is a pretty nice margin compared to compared to a B2C operation. That's a massive margin of like, I don't know, 30%-ish. So pretty good for net profit. So it's profitable. It's generating pretty significant, revenue in hundreds of millions. It's also growing reasonably quickly, it seems. I think the revenue figure I gave you was a 23% improvement on the previous year. So they're obviously growing pretty healthily. And yeah, one of the ways, well, there are several ways that they can continue that growth, and that would be inorganically by acquiring more businesses, or organically by improving their products and entering new markets and all the different things that they said, they want to do with the money that they raised from the IPO. So there you have it. They had 350 customers across 600 brands at the end of last year, they said. So pretty significant client list as well. And yeah, I think it's the idea is obviously to keep that momentum going. You mentioned before that it's a kind of swings and roundabouts thing, and I think when it comes to making a success of these public listings and big changes like this in a company, it's kind of all about timing in a lot of ways. And the other thing is that obviously they have found New York to be the most attractive place to list the business, which is kind of reflective of some trends that we've been seeing broadly across the sector over the last few months and years. So obviously the big example there is Flutter, which is listed in London and Ireland. Now it's listed in London and New York in a dual listing, and it's soon aiming to move its primary listing over to New York as well. They gave several reasons for that when they first announced it, mostly sort of deeper capital markets, access to local US investors, and all the rest of it. And I think it does make sense if you're a company that's primarily targeting the US, which Flutter is increasingly becoming, thanks to FanDuel, obviously. But I think that Games Global is kind of positioning itself in that way as well, Zach. I mean,
Yeah, I mean it's more of an ambition thing, right? Like because Flutter's already got like a huge US brand in the name of in FanDuel. While
yeah,
Games Global, while it does have some US operations and it's it's a supplier to all the big online casinos. I mean,
okay.
the US isn't where it's isn't its primary revenue base. So it's sort of it's listing in the US in maybe an ambition to be somewhere. Another thing I'd say is that as an international iGaming supplier, it wouldn't be the worst thing in the world to be subject to the compliance requirements of the SEC and the New York Stock Exchange, because that will show regulators that they're pretty clean. While coming in as a foreign company
Yeah,
might set some alarm bells ringing.
yeah, good point. It is a good point. But yeah, I think Purely Digital Gaming Corporation had some US clients that Games Global may well have taken over now. I think there probably is an element of thinking in a long-term perspective, and they're probably putting their eggs in a basket that's maybe 10 years down the road and thinking, okay, well, we might only have a handful of iGaming states at the moment, but sooner or later it's going to come. Obviously, with a particular focus on the sort of big four. I know Texas and Florida's kind of a bit of a tricky one, but Texas, it certainly doesn't look very likely, and California equally kind of really has struggled even to get sports betting going. But then if you talk to someone like Joseph Adabo in New York, he'll tell you that iGaming legislation in New York is simply a matter of time. He thinks it's a foregone conclusion, it seems.
I think that's very ambitious. The thing is, a lot of businesses sort of priced in that long term iGaming is going to be where we get our revenue. I think you saw this with maybe BetMGM or Rush Street Interactive. The iGaming legislation will change the whole game, will change the market dynamics. But I mean, we're coming towards the end of many states' legislative sessions this year, and we had no progress on any iGaming anywhere. There's been another state launch in Delaware, but that's that's been planned before.
Mm-hmm.
I think there has to be like a question of what are the assumptions that legislation will pass, because it seems to me that the environment's only getting worse. We're having the sports betting backlashes in full swing. People are increasingly seeing that the operators dominating iGaming are classically FanDuel and DraftKings, which really just removes a lot of the opportunities for stakeholders to really earn some money. If if there's like 5 racetracks and 3 tribal casinos or whatever in the States,
Mm-hmm.
then and only some of them are going to be partnering with FanDuel and DraftKings, what is the incentive to hop on to something when the market's dominated by these 2 big competitors? I think, I'm not saying that iGaming regulation is impossible, but I think it's getting to a point now where we really have to be questioning what our assumptions are and whether they're right.
Yeah, well put, Zach. Absolutely, I agree. And I think it's worth pointing out that there are a lot of benefits to being listed in the US, not only having the US as your primary target market. Games Global will be quite capable of continuing to target its existing markets internationally while listed in the US. So yes, I think it's a bit of a a bit of a value bet for them. They're kind of thinking, do you know what? I just don't think London. I mean, London would have been the natural choice because it's an Isle of Man business, so that's the closest to home. But yes, we're seeing London being a bit of the ugly stepsister at the moment to New York, and lots of businesses seem to be passing it up in favor of the large apple. But anyway, Zach, I think that was a nice little rundown of our first story of the day. We're going to move on in just a minute and look at Endeavor's take private deal. But first, I think we have a very brief video message to show.
10 teams, hundreds of studios, dozens of hub market partners, an industry-leading hub wallet, and just one API. Hub 88 is connecting businesses to a world of limitless content where the possibilities are endless. Hub 88.
Well, there you have it. And we should, of course, as always, say thank you to Hub 88 for sponsoring this episode, and indeed to our longtime sponsor in place. And we're very grateful for all of your support, of course. Now we're moving on to our second story of the day, from IPO to a take private deal. And we did report on this just a couple of weeks ago. Any of our regular viewers will have heard me and Zach. Was it me and you, Zach? I think it was, talking about Endeavor. Endeavor Group, which is the owner of OpenBet, but also the owner of the UFC, and it's a huge media and entertainment conglomerate. So it's got sports and betting and events and all this. It started out as a Hollywood talent agency, but it's just been buying up sports and entertainment and media brands ever since. So anyway, a couple of weeks ago, we reported that one of Endeavor's largest individual shareholder, in fact, which is called Silver Lake, a private equity firm, is planning to take the business private and take it off. I believe it's the New York Stock Exchange, isn't it, Zach?
I think it's the NASDAQ, but I don't quote me on that.
Okay, one of those American stock exchanges. So it's a $13 billion deal. So basically, what Silver Lake was going to do was purchase 100% of the outstanding shares in Endeavor at $27.50 per share. That values Endeavor at about $8 billion or $13 billion equity value, including its debts. So mega deal. It's already, 68% shareholder. And actually, if you add to that Endeavor chairman Patrick Whitesell and CEO Ari Emanuel, together they've got something like 89.5%. So vast majority of the business's total shareholdings. So it's the opposite to Games Global. They want to come off the stock exchange and see what they can do as a privately owned company. But Zach, we had another twist in the tale this week. Do you want to tell us what happened with one of Endeavor's other investors?
I will do, Connor. Just a quick correction. It is the New York Stock Exchange. I just looked it up, not on the NASDAQ. So you were right, not me.
Thank you.
So this is basically one of the investors is seeking to challenge the take private by alleging that the deal is going to benefit large investors and insiders, so basically Silver Lake and the chairman and CEO, over smaller public investors, people who bought the Class A stocks on the public stock exchange. I mean, like a little bit of background is that Silver Lake owns about 67% of the company, and when you add in the CEO and chairman, CEO Ari Emanuel and Patrick Whitesell, the chairman, that drives up to 89.5%. So really quite a substantial amount is held by these interests. And I should say quickly that Endeavor is like a huge entertainment company. Gambling is a very small part of what it does.
Yeah,
like it bought OpenBet off Light and Wonder for $800 million a couple of years ago, and before that, it owned IMG Arena, which is sports data company. But, you know, it reminds me a little bit of FL Entertainment, which owns BetClick, in that there's it's quite a small little bit of little tiny gambling division amidst this huge mega entertainment conglomerate.
Yeah.
But yeah, I mean, so the 13 billion take private will see any Class A shareholders will be paid $27.5 per share. And the investor challenging the deal says, wait a minute. If you look at analysts like Deutsche Bank and those kind of people, they're saying that the stock's actually worth $30 to $33. And the large stockholders and insiders have the option of rolling in their shares into the company, which they argue will be worth more. So in terms of the specific things it's highlighting, the investor is highlighting the equal this equal treatment provision of the which is saying, which basically says that all investors should be treated the same. So yeah, I mean that's kind of what it's all about. I'm just going to read quotes here, which is sort of the money shot from the complaint. Simply put, the squeeze out does not respect the public Class A stockholders' charter enshrined right to have the right to receive or right to elect to receive the same form of consideration as consideration received by the preferred insider Class A stockholders. So I mean, this is a class action, so they're looking to request the court that they can all move forward as a class. The class in this case being Class A public shareholders. I have no opinions about the success of this deal, but I would say that any big deal like this, I've seen usually gets a lawsuit or two. At the moment, if it's not successful, the take private is expected to close by the first quarter of 2025.
There you go. So I suppose in order for that to happen, this dispute will have to be resolved. I guess. I think the crux of it. Okay, there's a question with the valuation. They're a couple of dollars short from what the shareholder believes the shares are worth. But I think the main point is this idea that those 90% shareholders between them are going to be able to basically keep their stake in the business after the take private, and as it says, public stockholders are going to be squeezed out, basically, which I can see is you can kind of see why that would seem unfair. The question, of course, is whether it's legal and whether there's anything that the shareholders can do to block it. So they're going to be trying to obviously prevent that from going ahead, and we'll keep an eye on this one. But that's about as much as we know now. I think the other thing they said, obviously, when you've got that overwhelming majority of like 89.5% of shares, you don't need to put a decision like this to a public vote because it's your business and you can do what you want with it, I guess. So the shareholders weren't very happy that there was no vote, no waiver to approve a change in the existing kind of way the business was run. So yeah, I can see totally why people might not be too happy about that. And if you want the full detail on this story, do scan the QR code in the top corner of the screen, or just go to next.io and have a look at all of our latest news. I think, Zach, that's about all we've got time for today. What do you reckon?
Yeah, I think that's just about covered it, Connor.
There you go. Well, thank you very much once again for joining me, and thank you to everybody in the audience for watching. And finally, of course, thank you to Playson and to Hub88 for sponsoring us. Come back next week, actually, for a special treat. You may not see my face next week. You may not see Zach's. So who are you going to see? Well, tune in here to find out. Same place, same time. And I think I'll see you all again the week afterwards. Bye, everybody.
Thanks.